In today's video, we're discussing when to withdraw investments. We definitely want to be investing as much as possible, as soon as possible. But when exactly do we want to withdraw those investments? There are a number of factors that are involved in determining this, so we are going to cover those in today's video. So let's dive right in. It's important to know when to withdraw our investments. We don't want to be withdrawing them too early or too much and then running out of money during retirement. But also we may want to pull our investments out a little bit early for something else. So let's go over the different reasons on how to determine when to pull out our investments. And make sure and watch until the very end of the video because I'm going to share why I decided to pull out some of my investments early and how I was able to do that without getting a penalty. All right, the first item we want to take into consideration when we are deciding when to pull out our investments is our financial goals. Our financial goals are going to help us determine when the best possible time is to pull out our investments. For example, if you are saving for retirement or investing for retirement, you're not going to want to pull out those investments until you are actually retired. And even then, you may not want to pull out those investments because if you do have cash, then you could use that cash when you are retired and then start pulling out your investments. Or if you have passive income from some other type of investment, then you could live off that passive income in retirement until you need to start pulling out your stock market investments. Or if your financial goal is something for the short term, maybe saving up for a car, then you would want to pull out some of that investment before retirement age. It just depends on what your financial goals are. And this kind of goes along with the first point, but it is our time horizon. How long do we have to invest our money before we start pulling them out? If it is a longer time horizon, then the longer we can wait to pull those investments out. Even if we set a goal to start pulling out those investments at age 60, but we don't really need that money, we can definitely adjust our goal and not pull that money out of our investments until maybe age 65 or whenever we need it. But the longer we have our money in there, that longer time horizon, then the more our money can grow. And then the third thing we want to consider is our asset allocation. And for the stock market investments, this can just mean the asset allocation or the mix that you have of stocks and bonds, or if you have REITs or other types of investments in the stock market. Whatever you are investing in inside of the stock market, you want it to align with your financial goals and also that time horizon that you have. If we have a longer time horizon and we are saving for retirement or investing for retirement, then the more risky we can be with our investments and still have a calculated risk. We don't want to just be crazy and invest all of our money into one stock. We still want to be diversified, but we can be risky and invest in stocks or in a stock fund. But if we have a shorter time horizon, we may want to be a little less risky so we can actually start pulling money out and not see a huge drop in our investments if we're being super risky and only investing in stocks. We could have that mix of stocks and bonds. And if we are looking to pull that money out, because when we are investing in stocks, that is more about growing our wealth, and investing in bonds is more about preserving our wealth. So determining when to pull out our investments, if we want to leave money in our stock market investments, that is going to be more conservative. We can leave more of our bonds in the stock market and then pull out some of the stock investments that we have. But it really is based on our financial goals and our time horizon. And then the fourth thing that we want to take a look at is the tax implications. So depending on what type of account you have set up, there are different tax implications that go along with those. For example, if you have a traditional IRA set up, you are going to pay taxes when you pull that money out instead of when you put it in. So we want to be careful that when we're pulling that money out, that we aren't just draining our account and then paying a ton of money in taxes all at once. We would want to pull that money out over time. But with a Roth IRA, it is the opposite. You're paying taxes when you put that money in, and then you are withdrawing that money tax-free. So if you wanted to withdraw all of your money from your Roth IRA, if you're age 59 and a half, then you could just pull out all of that money at once and not pay any taxes on it. But of course, we don't want to just be draining our account. We want to pull out what we need so that the rest can continue to grow with that compound interest. And to bring up another account, if we set up a taxable brokerage account, we would want to hold our money, our investments, for at least 1 year in that taxable brokerage account, because then we are going to pay less on our taxes. We'll pay what is called a long-term capital gains tax rate. This can even be $0 in your federal income taxes, depending on how much you are pulling out. We want to be aware of all of these tax implications when we are deciding when to withdraw our investments. And then the fifth item we want to keep in mind is the market conditions. If we are thinking, all right, yeah, I'm ready to pull out some of my money from my investment accounts, but the market is down, we may want to wait a little while if possible and see if it will come back up, and then we can pull it out and not take a loss on our money. Or depending on what you are invested in, if you no longer feel like it is a good investment and it's continuing to lose money, you may want to withdraw that investment and you can put it into something else. These are just a few factors to consider when we are deciding to withdraw our investments. And like I mentioned at the beginning of the video, I wanted to share a personal example with you. When I was looking to purchase my fourth property, that was one of my financial goals, I wanted to take money out of my taxable brokerage account and put that money toward a down payment. And that's exactly what I did. I was able to do that because it was in a taxable brokerage account, which means I can pull that money out at any time. And for me, I had had that money in my taxable brokerage account for over a year, so I was able to pay that long-term capital gains tax rate. And then the other thing I did was take money out of my Roth IRA. So with a Roth IRA, you can pull out your contributions, anything that you've put in, at any age you want to. You don't have to wait until age 59 and a half. Of course, any interest that you have earned on that money, you cannot pull that out until 59 and a half without a penalty. But I ended up taking out some of my contributions in my Roth IRA and putting that toward my down payment as well. So when you are deciding when to withdraw your investments, you want to know which accounts you've invested in and what their tax implications are, what the penalties are, and you really want to know what your financial goals are. So there is no one size fits all. Everyone should pull out all of their investments at age 59 and a half and go traveling and just party it up. It's going to be very different for everyone. And if you want help in figuring this out, I have a free masterclass where I go over how you can work with me to invest in the stock market and help you know when to withdraw your investments. If you're interested in that, I will leave a link to the free masterclass below in the description. Comment below and tell me if you have already withdrawn some of your investments. I'm curious to know. And if you found this video helpful, please hit that like button and share it with someone else who would like to hear this information. And hit the subscribe button to subscribe to my YouTube channel and hit the little bell to get notified on when I post new videos. And if you want to see even more awesome content from me, make sure and check out the videos on the side of the screen. Thanks so much for watching. I'll see you in the next video.